Hi, this is Zak Mir with the Bulletin Board Heroes on Friday, the 15th of May. Starting off with AAA, All Active Asset Capital. The shares have been quite active over the last 24 hours. Nice bounce off just below the 1.5 pence level and the 20-day line at 1.6 pence. While we're above at least the 20-day line, looking for a top of March trend channel target as high as 2.5 pence. It'd be nice if we closed today above the initial resistance of May at 1.83 pence. That would be an end of day, end of week close, which tends to be technically significant. If you're ambitious about the stock, even after the move up from below a quarter of a pence, the target here after 2.5 pence could be rather greater, so 4 or 5 pence after that. But at the moment, just looking for the 2.5 pence area as the initial target over the next few weeks. Avacta, great news from that stock today, or at least a good reaction from the stock today. And we got this broadening triangle formation in place since the beginning of April, and even though the shares cooled off back towards the £1 zone, they never went below the 20-day line, which is normally a bullish feature. End of day close today above the initial May resistance at 133 should take the shares towards that April resistance line projection as high as 200 pence over the next 2 to 4 weeks. RSI at 74 is overbought, but nothing compared to what we saw in April, so relatively modest in that particular sense. Stock which I actually said maybe overvalued even before the IPO went out, when the stock came in around, I think it was £19, something like that. Obviously, we're a bit lower than that now, and I was going to leave it alone, but it's just too difficult to resist. This falling wedge here could be the start of something special, or obviously it could be a continuation of the long-term bear trend. But even if we do fade away after this latest rally attempt from below 30, could hit that line of resistance there at 40 pence, which if some people are already in the stock, would leave a reasonable amount of upside for them. Probably the real point to note here is actually that March low at 35 pence, end of day close or end of week close above that today for fans of Aston Martin could be the start of a potential recovery, at least a rather better price action than we've seen of late. Onto a stock which has been got onto the COVID bandwagon. So many companies have in the near term. See Braveheart here bouncing off the 20-day moving average, 26.68 pence. So above that, looking for a partial or even a full retest of the best levels that we've seen to date. So the top of a price channel heading towards 55, 57 pence. That price channel in place since the beginning of last month. Ideally, we see an end-of-day close above yesterday's intraday high at 31.85. That would help the cause quite a lot. Back into the pharma space with Evgen, and here quite a amazing rebound that we had since the early part of last month, hitting the 200-day line first in the middle of last month, and then breaking it to start May. That's currently at 9.83 pence, but the support line here currently is around 11.8 pence, and while we're above that, looking for significant upside. Not sure whether I've been a bit ambitious with that 40 pence target, but it just does look with this very, very sharp angle of ascent for the shares that we could see a big target here. Probably initially getting back down to earth, maybe towards 17, 18 pence and a line from March, but the big target here over the next 2 or 3 months could be up to 40 pence. Let's see what happens in that particular situation. Sticking in the same kind of sector, EKF, also a strong line angle of ascent as well. We had the gap through, well, we've actually had 2 gaps already, 3 gaps in fact. One was the bear trap gap reversal in March, then another one for April, and again today. Initial May resistance was 42 pence, so above that looking for further upside, and that could be up to 68 pence, which is the top of a rising trend channel drawn from February, so something to potentially cheer about over there. Normally, as you've seen, I'm going for momentum plays, but in the case of IronRidge, there is a possibility that we've had a bear trap here below that April low of 8 pence. End of day, end of week close above 8 pence, or obviously end of day closes next week above the 8 pence level would cement the idea of a bear trap towards 7 pence and a possibility of a retest of 10, 11 pence. But it would be understandable if people waited a little bit on that particular situation. Back to the Corona plays with Mega Diagnostics. Here we've had a 3-day bounce off the 20-day moving average at 50 pence and the floor of this rising trend channel from April. I suppose the stop loss now back below today's initial low, so 45, 46 pence, ahead of a potential move towards the top of the rising trend channel at 80 pence. If you're cautious on the shares, which some may be after the recent gains that we've seen everywhere, then probably breaking 55, 57 pence on an end of day close would do the trick as a momentum buy trigger. Open Orphan had a little pullback from 14 pence, which was one of the previous targets, but it's back nearly up at that level now, and with this V-shaped bull flag and having filled the gap from earlier in the month, it looks as though the last rather optimistic sounding target at 20 pence plus could be back on the cards. That July resistance line from last year heading towards 23 pence. End of day, end of week close above 13.5 pence could be the start of a move towards the top of that channel, given the momentum that we're seeing at the moment. Away from the farmers, and we've got Premier African, which I dithered in terms of looking at over the recent days, because obviously it has not been it's been a rather hit and miss affair. We've had these sort of false breaks all over the place. This one looks rather better. End of day close above the initial May resistance at 0.12 pence. Today should be enough to take the stock up towards the top of a rising trend channel from February at 0.22 pence. Finishing off with the stock making its debut on the Bulletin Board Heroes, RDI Reit. And this is similar to IronRidge in the sense that we have a potential bear trap reversal, so 50 pence the support for March and April, and a weekly close above that could be the start of a move at least back towards the neckline resistance at 76 pence for this particular situation. Very good bullish divergence, which is probably the main plus point, in fact, at the moment. The much lower low there for May to date, but the RSI holding right through the post-March period, so one to watch out for. That's it for me today. More updates on Monday.